The president announced this yesterday. He made the decision with his advisors yesterday, and they put out an email last night with the president's statement. Here's what the president had to say. He explained about the previous round of tariffs and the Chinese retaliation. He said he didn't like that, and he said, therefore, today I directed the United States Trade Representative to identify $200 billion worth of Chinese goods for additional tariffs at a rate of 10%. After the legal process is complete, these tariffs will go into effect if China refuses to change its practices and also if it insists on going forward with the new tariffs that it has recently announced. If China increases its tariffs yet again, we will meet that action by pursuing additional tariffs on another $200 billion of goods. The trade relationship between the United States and China must be much more equitable. The president also said that he had a good relationship with Xi Jinping in China, but nonetheless, the United States simply needed to rebalance that trade relationship. And guys, I can tell you what the administration is thinking here. The president's thinking and his advisors thinking on this. They felt very much that they had no choice after the latest round of Chinese retaliation to go forward with these tariffs. They also feel that it's not that big of a deal for the U.S. economy. They have cited in the past the $19 trillion size of the U.S. economy versus the size of these tariffs, relatively small. The Chinese economy relatively in the same boat. Also, they feel very strongly that the United States has much more to gain and the Chinese have much more to lose in any trade conflict. And that's because the Chinese import about $505 billion worth of goods from the United States. The United States imports $505 billion from China. Vice versa, the Chinese only import about $130 billion from the United States. So therefore, they feel that this $200 billion number is not a number that the Chinese can match. They only have about $80 billion left of room to impose additional tariffs at this point. So the Chinese simply can't impose tariffs on a scale that the United States can. So the question here is, what other actions could the Chinese take beyond putting tariffs on all $130 billion worth of goods that they're importing? What else could they do? And that's an open question at this point. You do have to expect some retaliation here from the Chinese side. But that's the thinking going into this morning. One, the Chinese have more to lose here than the U.S. does. And two, ultimately, it's not that big of a deal for the U.S. economy, guys.
Eamon, in the past, the way of thinking has always been that, look, you have to leave the Chinese a way to negotiate and let them save a little face. I know we're throwing all kinds of standard operating procedures out the window,
yep.
But is there any way that both sides can save face in this situation? The more escalated it gets, I think the harder that becomes.
Yeah, I think you're right. I mean, the president is not about saving face, right? The president is about gaining face for himself. And the question is, how does that play out here? If you're going to get in this endless cycle of retaliations, is it endless, and does that have a broader effect on the overall global economy? And the other question is, what other measures can the Chinese use to retaliate? We talked about that imbalance, right? If you have $505 billion worth of goods that you can continue ratcheting up the tariffs on as the United States, you're in a good position if it's just about tariffs, because the Chinese can only go up to 130. That's it for them. So then at some point they won't be able to retaliate anymore after this $200 billion. But what else could they do? Could they stop buying treasuries? Could they do something in terms of making life difficult for American companies that operate overseas? Could they increase the tariff rate, not just the dollar amount of goods that are being imposed tariffs on, but also the entire rate on those tariffs? Those are a lot of options that the Chinese have now. We'll see what sort of arrow they take out of their quiver here to respond. But it seems clear that there is a response coming, Becky.
Yeah, Eamon, we're going to talk, in fact, about a lot of this stuff, because just a couple of thoughts. So we're down 1.4% today. China's down like 6%. Nobody likes that. It's bad. I understand that. But we'll see whether that continues. Plus, we've had people coming in here recently saying that the economy is too hot. And the Fed, it's not acting because of, I don't know, normalizing, but actually needs to slow the economy. I don't happen to agree with that at all. With inflation running at like 2% and rates this low, I think of that at like 7, 8, 9, 10% interest rates, where the Fed comes in to try and, where you got the wage price spiral. So I don't believe that. But, Trump's got 40% on the stock market in terms of appreciation to work with since he took office, and he's got theoretically a really solid GDP to work with, and the rates have already gone down on this. We got the 10-year below 290 today. So if I could almost make the case, if there was ever a time to try to correct the inequities of the past in terms of the way we've been taken advantage of by China, maybe now's the time. Now, these two guys we're going to talk to, Eamon, bring up something pretty important. That is the election. So Trump's got to think about if China goes to the Farm Belt and to his base to retaliate, those are the people that are going to feel the pain, and that's where there could be a problem. You know,
there is no question. That the administration does agree completely with what you just said, which is this is the time. They feel that there's a lot going on in the U.S. economy that's very strong, that's much broader than this trade situation. Jobs, stock market, all of that have been good. So if you're going to do it, you want to do it in this type of environment. But you're also exactly right. The Chinese are very smart about this, and they can figure out exactly how to sort of poke into the U.S. economy in ways that hurt the president's political base, in ways that are designed to make him feel political pressure to back off of this. The problem is for the Chinese that the president is just not the type of guy who likes to back off. He doesn't really back off on a lot of things, and any public perception that he's backing down will be untenable to this White House. So how do you get out of this cul-de-sac is going to be a fascinating question.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.